Hello, all of you. I hope you all are doing good. Now, today we are going to do the revision of accounting standard 17, that is segment reporting. Okay, so very simple accounting standard. As you can see that here on screen, chapter roadmap, we are going to cover introduction, objective, types of segment. So there are two types of segment: business segment and geographical segment, reportable segment. Then definition of the terms used in the accounting standard: segment revenue, segment expense, segment result, segment asset, segment liability, primary and secondary segment reporting, and format of segment reporting. Let me tell you honestly that here, the most important part of these accounting standard that is going to come in examination, this is point number 4. Okay, reportable segment threshold. Most probably the question is going to come from this portion. Okay, so but we'll cover each and everything here. Why there is a need of accounting standard 17? Why this accounting standard? Okay, now the reason is that, as we know that here, entity might happen, it might happen, he's working in different products. Okay, I'm saying from the product point of view. If I say that is Geo, example that here, Geo deals in different product. For example, they deals in telecommunication, okay, they deals in broadband, okay, Geo TV, different types of the product that's come of the Geo. So what is going to happen? I'm just giving an example. So when I go, if you look at the financial statement of a Geo, so this is a Geo's financial statement. They write it down there, all income and expenses, they write it down. Okay, let me prepare in simple form, T form. It's a profit and loss account. They write it down, all income, all expenses, and the profit comes here, profit or loss, whatever. Okay, but what happened here? When I say they write it on all income and expenses and the profit or loss, whatever it comes at here, but I am not in a position as a user of financial statement. I am not in a position to find it out. That here now, I mean, from which segment, how much profit that they have made, as they are dealing in different type of product. Okay, for example, if I say that is Geo that here now, they are dealing in different types of product, like a telecommunication, okay, broadband, okay, and the digital services, different types of product that they have. So let's say 1, 2, 3, 4 products that they have. So it might be happen, the first product is in the profit. Let's say that they have a profit of, let me write it down, that they have a profit of, let's say that here, of 20 crore. Product, they have a profit of 30 crore. Products see that they have a profit of, let's say that here, again, let's say 10 crore. So how much total? 20 plus 30, 50 plus 20, 60. Now here they have a loss of 5. So what is the final profit which is appearing? If we see the final profit is coming 55, correct? Yes. So when I see the financial statement, I will see only 55 here, because this is a financial statement that they have prepared by considering all the product, and that is correct. But as a user of financial statement, I am not in a position that here to find it out how much product wise that they have made a profit or loss, whatever is that here. So it might be happen that here now that because one segment might be in a loss or more segment, whatever is that. But if I want to see the segment wise performance that here, so we want a segment reporting. So this is, they have to report the segment wise, but when they have to report the segment wise, we'll discuss that. So 3 things is going to come here. We will discuss that. First of all, that here now, what is segment? Okay, we'll discuss, this is important, we'll discuss what is segment. Now, whether all the segments are reportable segment, it might be hundreds of product that they have. Whether all are reportable segment, not necessary. So we will see first what do you mean by segment. Then we'll see a reportable segment. What we'll see that we will see a reportable segment. Okay, now reportable segment that is. You got the point? Now, after we look at the reportable segment, you know what is going to happen? One more point is going to come that here, whether in those reportable segment, whether they are the primary or secondary. Okay, if they're primary, so different type of reporting requirement that they have. If they're secondary, then different type of reporting requirement that they have. So you will tell me, sir, what is this primary, okay, and secondary? What is going to happen? First of all, we have to see what to mean by segment. There might be hundreds of segments. Whether all are reportable, not necessarily. There are certain criteria, there's certain threshold. So you'll see the out of those, what are the reportable segment. If they are reporting a segment, mean what they have to report? Primary reporting, only secondary reporting. So we will discuss how to decide whether the primary reporting they have to do or the secondary reporting they have to do, because the reporting requirement is going to change on the basis whether it's a primary reporting requirement or a secondary reporting requirement. Okay. So first of all, that now I just give an example from the product wise, but segment not necessary from the product wise only. The segment might be geographically. For example, that here, if someone is doing a business in South, or for example in Chennai, so what is going to happen if someone is doing a business in the South, for example Chennai, and they're also doing a business in North, let's say Delhi. What happens geographically? They are at a different location that here now. Okay, so the risk and reward is also different. I will discuss with you now here in detail, but geographically they are different here. So risk and reward might be different that here. So these two segments will be treated as a separate segment. Okay, these are a different segment. One is in the Chennai and one is in the Delhi, because the risk and reward are different. So when I do the reporting of the segment, my segment might be product wise, my segment might be geographically. Okay, geography, location wise, it might be different that here. So we'll discuss one by one each of them. Okay, so I already given in here the introduction. Enterprise deals in a diverse product or services that here now operates in different geographical area. Segment information is used for risk and reward of their product or services. So it might be that product or service and operation different geographical area. So it might be product wise, or it might be a geographically wise, location wise they are at it. It might be a different location. So my segment, that's why there are two type of segment. The business segment means the product wise, and the geographical segment means the location wise they are different. Okay, I will discuss the definition with you. So they say here, objective: establish the principle for reporting financial information on product or services and geographically area. Help user in understanding the performance, assessing the risk and reward, and making informed judgment. Obviously, when the user of financial statement will get the information of the product wise or location wise, that it will help them to take the decision. Okay. Now, how many types of the segment we have? Two type of segment. The first is what? The business segment. The business segment is product wise. So they say definition: distinguishable, different component of an enterprise that is engaged in providing an individual product or services or a group of related product or services. When I say product or service, it might be individual. Okay. So it might be a group of related product. You'll say, what is a group of related product? For example, a company is dealing in ice cream as well as the milk. So when I say ice cream, they have different flavors in the ice cream. So different flavors are not different segment. They're one segment only, but a group of related product. Okay, you got the point that here. Okay, so it might be individual or it might be a group of similar product. Okay, and it's subject to different risk and reward from those of other segment. It means a company might deal in various type of product that. But what is going to happen that here now, when the company is dealing with various type of product that here, what is going to happen here now? We have to see whether risk and reward are different or not. For example, a company is dealing with ice cream as well as the milk. So they're the different products that they don't. I'm going to say risk and reward is not the same. Different target customers are there. Okay, risk and rewards are different. They're a different product that here. But what happened to decide whether they are going to come under the one category or a different category? They have given some clue. They say a factor of relatedness we have to consider. What does it mean? Let me one by one. Let me explain you. We have to see the nature of the product or services. Like we say, ice cream and milk, different product. Okay. Production process is also different. Okay. In ice cream, the process of doing the production is different. Milk, we may add some flavors to that here. Okay. But they're different production process. Type of class of customer might be different. Okay. Distribution method is also different because ice cream that we have to keep it at a certain temperature that. Okay. Regulatory environment, if applicable, like the different segment, like the banking, insurance, what law applicable. If the relate, I'm going to say the same or different that here. So they are not saying all these conditions should be satisfied. They say single segment exclude the product or service. Okay, risk and reward is different. They are a different segment. But despite variation, product or services with a single segment anticipated to be mostly similar with the majority of the factor. What does it mean? They are not saying to call it someone in under the one category. All these conditions should be satisfied. There is a majority of it fulfilled. Then we are going to cover under the one segment only. So in ice cream, hundreds of flavors come when we talk about ice cream that here. So we say nature of the product is same, production process also same, customer also same, that distribution method is almost same, law applicable, that is also the same. So majority, not necessarily all the full should be fulfilled. If majority of it fulfill, so we are not going to call them different flavors in a different segment. They are going to call it a one segment only. Okay, so they are just giving us some indication how to decide whether the product is going to come under the one segment or a different segment. So business segment talks about the product. But what happens is that when I talk about geographical segment, so what is going to happen here? The risk and reward is different, but not related to product. If someone is selling for example, I'm just giving an example out here. Some product which has a huge demand in South, like in Chennai, suppose, but that product might not have that much demand in the North. Like that. Okay. So if I say that here, now if someone is, just an example, someone is running a restaurant that here. It is a South Indian restaurant, the dosa. Okay. So they have a huge demand in Chennai. In North also they have a huge demand, but obviously in the South they have a more demand. You got the point? They have a more demand. Okay. So what is going to happen that here now? So geographical segment means even the product is same. The product is same, but we are selling it at a different location. So risk and reward are what? Are different there. You got the point here? So we are talking geographically. The product is same, but we are selling it at a different location. Because of the different location, the risk and reward here is different. So that's why we are going to call it different segment. Okay. So they say here distinguishable enterprise. Okay, distinguishable enterprise that here now component operating with a specific here economic environment subject to different risk and reward compared to the component in the other environment. So it might be happen that they say a distinguishable enterprise component means operating with a specific economic environment. What is specific economic environment? It means that you have a different political conditions are there, okay, because of the different location that, okay, now you can say that here now employment rates are different location, different circumstances are there, okay, due to the political situation, also risk and reward, the changes due to the location that here. Then they say that here now, these talks about the point number B, which talks about the geographical segment that here. But certainly whether it's a one segment or a different segment in the geographical, also how we have to decide. So they have given some clue. They say that here now we have to see similarity of economic and political condition are similar or not. Different segment. Okay. Then there's the relationship between operation in the different geographical areas, how they are working together. Okay. Even for example in South, different states we have. So whether relationship between the operation is happening in different geographical areas, whether they're working as a one unit or different. Okay. Now what relationship that, how they're connected to each other. The proximity of operation that here, this is also same that here. Proximity of the operation means that is how they're located that here. Okay. How they're connected to each other. Spatial risk associated with the operation in particular area. If the risk is same, one segment. If the risks are different, the different segment. Exchange control regulation. And underlying currency risk. Currency risk is, I'm going to say that here now, because in India, I'm talking about that here. But what is important to note that here now, they say is a risk, to make it simple, risk and reward different, in even the geographically that they say, it might be happen. Now in South, different state, different risk and reward. So that will be called a different segment. Or the risk and reward is same. So South might be one segment, North might be one segment. Geographically, I'm explaining you. Okay. But they say single geographical segment exclude operation in economic environment with significant risk and reward. Risk and returns are different, then they're different segment. Now geography, this is important. Okay. They might ask you an MCQ. A geographical segment may be a single country. It means like India. Or it might be a group of two or more countries. Certain time what happened that here, certain time geographical segment that it might be a single country like India. It might be a group of two or more. Wow, how it can, there are some multinational company. They work all over the world, like in Africa, like in the Middle East that here, okay, like Asia, like they have all over the world. So they make it, if the risk, I mean to say if these conditions, if they are going to be under the currency risk is same, exchange control is same, like I'm just giving an example that, like in Saudi Arabia and the UAE, okay, they are very much connected that, different country, but very much connected that they are. So it might be happen, this is a brand like the Louis Vuitton, very famous brand, Louis Vuitton, okay. So when the Louis Vuitton have a office in a Saudi Arabia, Riyadh city suppose, and they have an office in Dubai as well. But they say even though they are country-wise different, But if they say no, almost the operation are connected to each other, the control is also the same. Their currency is different, that obviously, but almost they are, I mean, almost similar. The exchange rate is similar, that okay. So what is it might be happen? They say no, even though it's a two country, but we call it one segment only, okay, or a region within the country, like in our case that in India we have so many states that here, okay. So what is in a different region within a country? It might be a north, okay, it's a different segment, south is a different segment, it might be happen. So all these, it might be single country, it might be single segment, not necessary, might be single country is single segment, two or more countries might be a single segment, or within a country we have a different segment that is. All this depends on the risk and return of that particular segment. Okay, now I am coming to the most important part of this accounting standard 17, that is reportable segment. So we understand the first part that here now. What do you mean by segment? Okay, we understand this here. What do you mean by the segment here? What do you mean by the segment here? Okay, now I'm going to discuss it whether all the segments, I might have hundreds of segments, whether all those segments are the reportable segments here. No. There are certain conditions. So those conditions should be fulfilled. Then only we are going to call them as what? A reportable segment. You got the point? Then only we are going to call it as a reportable segment. So what do you mean by a reportable segment? Now we'll discuss this. What do you mean by reportable segment? So what they tell us that we call it a reportable segment, apply the 10% test. You'll say, what is this 10% test? Okay. So it is, first of all, there are three. Okay, there are three that it is not necessary that here all of these three tests should be passed. No. If anyone, if any one test needs to be, if anyone fulfilled it, okay, needs to be met for the report, if any one of these three fulfill, then we are going to call that particular segment as a reportable segment. Okay, they have to report it. They have to report it that here about that segment. Okay. So is it necessary all these three tests should be fulfilled? No. Any one of these, it's okay. Okay, let's take one by one. The first is related to revenue. What I'm saying, listen carefully. Okay. The first is, they say, a revenue test. Now, what do you mean by a revenue test? What do you mean by revenue test? That here they say, now here revenue external plus internal of the segment. External plus internal of the segment is more 10% or more of the total revenue of all the segment. Now, please understand this. They say here revenue test, they say external and internal. What is internal? When one segment is selling the goods to another segment, that is also going to be considered here. If the external and internal revenue of that particular segment that here is 10% or more of the total revenue, then we have to call it as a reportable segment. Let me write it on certain figures here. If I say that here, I have here, suppose if I have a, let's say that here, I have 4 departments, A, B, C, D, and E. Now, when I talk about the revenue that here, I have here, they have a revenue of 20, 30, 40, 6, and 4. So, total is going to go how much? 20, 30, 40, how much? 50, 100, correct. Okay, to make it simple, I take the figures like this, 100 that here. If I say percentage wise, how much is the percentage of A? This is revenue that they have. How much is the total revenue of the organization? 100. So what will it is coming? 20%. How much it is coming? 30%, 40%. Here it is coming 6%, and here it is coming 4%. So which is the reportable segment here now? Is the A, B, and C. Why? Because their revenue is 10% or more than that here. So all are the reportable segment. Now we have there how many segment? 5. Out of 5, how many are reportable? 3. What to report? That we'll discuss it later on. Okay. Now, second test I will discuss with you, profitability later on. First, let me talk about asset. Asset here, only difference is that in the revenue. In revenue, we're talking about the revenue only. Here we're talking about asset. So this is segment asset are 10% or more of the total. So this is very simple. I don't think so they need to write it that here. What I'm saying that here, your asset of the particular segment is 10% or more than that of the total asset of the enterprise. Then we are going to call it a reportable segment. Now this point 2 is very interesting, profitability segment. Okay. What they say that here now, a segment result whether profit or loss is 10% or more of the combined result of all the segment in profit or the combined result of all the segment in loss, whichever is greater in absolute term. Let me tell you honestly, student might get confused. So what, to make it simple, I made a certain steps that here. I will explain you one by one to you. Now let me write it down something here for you first. Okay. I say I have a 4 segment, let's say 5 segment, A, B, C, D, and E. How many segments do we have? 5 segments that is. So if I write it down here, segment result, say 20, 30, 20, then they have a loss 40 and 20. Okay. So out of 5 segments, 3 are in profit and 2 are in loss that here. Okay. Why they put this clause? I will tell you that here the combined result loss also. If they don't consider loss making segment, it means never it will be happen that we are reporting a loss making segment. So it should be happen that we might have to report the loss making segment also. How the user of financial statement will come to know that. Okay. So they put this clause. Let me explain you one by one. So segment result means profit or loss. So 3 as a profit, 2 as a loss. So step number, they say add the profit of all the profitable segments. How much is the profit? Only the profitable segment. So we have a 3 profitable segment. These are the profitable segment that here now. Okay. How much it is? 20 plus 30 plus 20. How much it is? How much it will come? 20 plus 30 plus 20. That will come 70. So let me write it down here. 70 is 70. Then they say add the loss making segment. So I will do the total of the loss making segment. If I do the total of the loss making here segment, 40 plus 20, how much it is? 60. So but they say that here now, third, take the figure from A first and second, whichever is greater in absolute term. You say first now, whichever is greater, sir. One is profit, one is loss. Obviously, you have to take a profit. No. They say whichever is greater in which? In absolute value. What does it mean in absolute? Whichever is greater in absolute value. What does it mean that here? When I say the absolute value that here now, what is going to happen? They say ignore. Don't call it as a loss. Don't call it as a negative figure. I will say 70 or 60, whichever is greater. So 70 is greater. 70 is greater. Okay. If my loss was supposed to be 80 is coming, I am to consider 80. You will say, no, negative is a loss. No. Even though it's a loss, we are going to read it as the absolute value as per accounting standard 17. Okay. So whichever is greater in our example, 70 is greater in step number 1 or 2. Okay. Then they say the segment which has a profit or loss equal to 10% or more of the absolute figure computed in point number 3 becomes reportable. So we just have to take it 10% of it. So 10% of step number 3, that is coming here. How much in our example? That is coming here 7 that is. So I will call it that here now 7. So any segment whose whether profit or loss, it doesn't matter. If it is 7 or more than that, that's a reportable segment. So here A is a reportable, B is a reportable as it is more than 7. 20 is reportable as more than 7. You say, no, 40 is a loss, sir. Negative. No. Absolute value. 40 is more than 7. Don't call it a negative figure. It is more than 7 reportable. E is also reportable more than 7. All segments are reportable segment. Got the point that here? So remember these 4 steps. Do the total of all profit making segment. Do the total of all loss making segment. Take the higher of these two in absolute value. Take the 10% of that. Any segment whose value is more than the 10, these value more than these. Those segments we call it a reportable segment. Okay. Now they say here whether all these should be 3 satisfied or any one of these 3 any one of these 3 satisfied, we are going to call it a reportable segment. Now there is a segment not meeting the reportable criteria as per the above may be designated as such as the discrimination of the enterprise management. Irrespective of this, they say if any of the enterprise, if any of the segment they don't fulfill any of these criteria, we don't call it a reportable segment. If but voluntarily any company they want to disclose about that particular segment, that they can call it a reportable segment, even though that is not a reportable segment. For example, if a segment they not fulfill the revenue test, profitability test, and asset test, so that segment is not a reportable. No need to disclose them separately. So, but what is going to happen? But if voluntarily I want, so I can disclose it. So you will say, sir, why any organization will want it voluntarily? It might be happen we started a new product, even though their revenue is 10%, profit is they're not less than 10%. Less their profit is 7%. Profitability test is also less than 10%. Asset test is also less than 10%. All these are less than 10%. That's not a reportable. But I want to disclose about that product because we have launched that product during the current year only. Even though it is less than 10%, but still it is 7%, 8%, 9%. They are near to 10%. That at least people will come to know that it's a new product and the product is performing good. That it's a new location. That location is performing good. That even though it's not 10%, but still that is good. So I want to tell to people, listen, it's a new product. Just we have launched this year, but see how good he is. Okay. So voluntarily, if you want, we can do that. Now they say here, revenue threshold requirement. What is this revenue threshold requirement? Is that here now? Ensure that the external revenue of the reportable segment contribute at least 75% of total revenue. Now understand this point here. Here they say all this, they say ensure the external revenue only. Here we are talking only external, not internal and external, only and only external. So we have to see the external revenue of the reportable segment. So out of 10, we decided, suppose 7 are the reportable segment. So out of, we have a 10 segment, 100 segment, 100 out of 100, some are reportable. So we have to take the total of sales, external sales of all the reportable segment. They should be at least 75% of the total organization revenue. You got the point? What I'm saying, suppose out of 100, whatever is that, out of, to make it simple, suppose if I say out of 5, 3 are reportable segment. How much is the external revenue of those 3? I say 70%. No. We have to add more segment. So the sales should be sales of the reportable segment. It should represent at least 75% of the total revenue of the organization. Okay. So they say here, they say if not met, identify additional segment as reported, even other segment not fulfill the criteria of the 10% test. Still we have to grab that. We have to take those segment, because all reportable segment, when we do the total of the reportable segment revenue, that should represent at least 75% of revenue of the total revenue. You got the point? Okay. Now, something is important. They say no, this is the most important. These 3 tests that here. Okay. Now, what it says in the notes that here now, they say previously reportable segment remains so even if the current revenue result and fall below. Okay. They say if once you are reportable, that done. That's a reportable. If previously reportable remains so, even if the current revenue result and asset fall below 10%. Once you are reportable, then you are a reportable segment. Okay. This year you fulfill the 10%, next year not, still you will call it a revenue or the reportable segment next year. Then they say here, if a segment qualifies the reportable segment in the current year, comparative preceding period data should be restated to reflect as it is as a separate segment, even if it did not meet the 10% threshold in that period unless impractical. What they are saying that here, suppose previous year, current year. In current year 2026, that year, I'm a reportable segment. But in previous year, if I say I was not a reportable segment previous year, but we have to restate that year. Okay, restate in 2025. Restate, okay, in 2026 to or for comparison. Okay, what is going to happen now? I will say no. In 2026, I am a reportable. Previously, I was not a reportable segment. But we have to restate this figure in 2026 for the purpose of comparison. So they are saying in previously we were not a reportable segment, but during the current year we are a reportable segment. What is going to happen now here? We have to restate in 2026 for the purpose of these figures. We have to change the report. We have to restate that. Why? Because we have to show the comparison. How much of that particular segment during the current year, how much it was in the previous year. Okay. Now let me tell you honestly, we have discussed about the I'm going to certain time we say the revenue, certain time we say the asset. Okay, like that we say that here the profit and all that we talk about. But let me tell you honestly that here now. That's why I have given the definitions that here, okay, to make it simple. What do you mean by revenue? What we have to include, what we have not to include there. About expense definition, include and exclude. Result is obviously revenue minus expense. Asset, what include, what we should not include. Liability, what should we include, what we should not include. Okay, but let me tell you honestly that here now is not relevant that here. But just remember one thing that here now is, this point is important when it's come to the asset. Okay, now just listen, what I'm saying that is only important that here. This is just for the reference purpose. Segment asset, when it comes at here now, one thing is income tax asset is not a part of a segment asset. Okay, income tax asset, okay, if any advanced tax, something like that you have paid, those is not a part of the segment. Remember this, they might ask you this, they will ask you this only, not other. This is just for the reference purpose. Okay, now I'm coming to a point that here now we decided that here now it might be happening. We have a hundreds of segment that here, but all are reportable? No, not necessary. So we have a segment, then we have a reportable segment. We have to decide in that. Okay, it might happen we have 100 so many segments. Out of that, some are reportable. Now whether they are primary or secondary, because on the basis of that we have to decide what to disclose. Let me tell you only, this is also not so important. What is important? This section is important only. Okay, but let me explain it quickly that here. Okay, they say here is the primary segment. Okay, if it is a primary, what should we disclose? If it is secondary, what should we disclose that here? Okay, what it says that here, A primary format. They say primary segment reporting format, business or geographical, based on the dominant source and the nature of the risk and return. Business segment selected if the risk and return is influenced by the predominantly by the product and services differences. Geography chooses if influenced by the diverse. Who is primary? I mean to say product is primary or the geographically it is product or location. Which is primary? It depends. So in my primary, it might be happen my, how to decide that here? Who is primary? It might be happen that here now that a product is primary, okay, or product is primary that here now, or a location, which is primary. So here, which is secondary, product or location? Okay, so here either the product or location will come same here that here. Okay, if the product is primary, then location will be secondary. If location is primary, product will be secondary. Okay, they say we have who has the more predominant, who has the more dominance that here, who rules that here, product wise basically more risk and reward, or the location wise. Okay, so we have to decide, that the management has to decide if whatever the primary, whatever is the primary, that product or the location. So for what we have to disclose for each reportable segment, we have to disclose the how much is the revenue of segment, the cost of the result means profit or loss, total carrying amount is the book value of asset and liabilities, the cost of acquiring the asset, depreciation, amortization, significant non-cash expense. We have to disclose all this. Not so important from examination point of view. Just we have to go through it. Not important. Okay. Now, if we decide, okay, the product is primary, then what about secondary? Then I will come to secondary. So they say business segment requires additional information. Now understand this here. Okay, business segment primary format, sorry, require additional information. Okay. Now we have to decide that here. What was the primary? I'm going to say that now. If I say what is the primary that here? Okay, if I say primary. So primary that is if the business segment that here now. So geographically segment will become the secondary. If I say that here, the primary, if was a geographical segment, then the business segment will be the secondary. So this is primary, then this is secondary. If this is primary, then this will be secondary. You got the point here now? So they say a business is if it is a primary, if it is a primary, business segment is primary, then what we have to disclose? They say business segment is primary, additional, so business segment primary format require additional information. So what are the additional information they require? So they say, in case of a secondary, geographical segment revenue. So this is what they're talking about, what we have to disclose that here. So what they say, a geographical segment revenue from the external customer is 10% or more of the total enterprise save. The segment revenue we have to disclose from the external customer by geographically we have to disclose that here. Okay, it is secondary requirement. Then they say if geographical segment assets are 10% or more of the total asset of all the geographical segment, so we have to disclose the total carrying amount of the segment asset by geographically. Location wise, we have to disclose them the value of the asset and the total cost incurred during the period for acquiring the segment asset. If the primary segment is a business segment, so secondary will be a geographically segment and we have to disclose this point. Now, if primary, if I say that here now, so if a primary is a geographical segment, then secondary will become a business segment. So then we have to disclose this. If a geographical segment is a primary segment, then additional information on a business segment is required. What requires in a business segment? It requires what it requires. If the business segment sales to external customer is 10% or more of the enterprise, segment revenue from external customer we have to disclose. If business segment asset are 10% or more of the total asset that here now. So total carrying amount of the asset of segment asset and total cost incurred during the period to acquire the segment asset that here. Okay, now please understand that point. So what is going to happen that here now? When we talk about that, okay, when we talk about the primary and the secondary, we have to see who is primary. Primary, who dominate more, location or product? Okay, once we decide if a product is dominant, geographical will be the secondary. If the geographically is the primary, then product will become a secondary. Okay, so we have to see when we talk a secondary, who was the primary? Business, a product, business means the product. If product is primary, so we have to disclose these about the geographical. If the geographical is primary, so in secondary we have to disclose about the product is. You got the point? Okay, now here other disclose the inter-segment transfer, means and measure segment revenue from the transaction with the other segment. Inter-segment transfer should be measured based on their pricing use at cost, below cost or market. It doesn't matter when they do inter-segment transfer. So it might be at cost, it might be at a market price, it might be below the cost. That doesn't matter. but disclose the basis of pricing for inter-segment transfer and any changes in it in the financial statement. What they are saying that here, it doesn't matter at what price, to make you confused. It might be happen, they will tell you segment A transfer to segment B below the cost. No problem. There's nothing wrong, but they have to be consistent. Okay. They say if there is change in accounting policy for segment report, they say disclose the changes in accounting policy for segment reporting with a material impact on segment information. Include a description of the nature of the change in the financial effect if reasonably determinable. Example here, changes in the basis for allocation of revenue expenses to segment. This is also very simple, that is not so important also. If they change in accounting policy, what is going to happen related to the segment reporting? For example, there's some common expenses incurred for all the segment. I have to allocate those expenses because when I decided how much is the result profit, so I have to allocate all the expenses in those all the segment that year. So when I allocate the expenses, how to allocate? There should be some apportionment. How to apportion that here? Okay. So if previously we decided equally, now we say no. Now we decided on the basis of the revenue. Okay, so we're changing the policy relating to the allocation that here. So this is what they're talking about, that we have to disclose if there is a change in accounting policy relating to segment reporting. Okay, so now whatever we have discussed till now, just remember these three rules, the most important. Okay, now I have also, for a certain time, they tell you rarely, they might ask you to do this, prepare the segment report, okay, which is given ICA study material as well that here. So I've given the format to you that here. How much is external revenue that they have a segment wise, okay. Is there intercompany that should be eliminated, okay. How much is the internal revenue that they have? How much is the expenses that they have here, external expenses, inter-segment expenses that they have. Then total expenses come. How much is segment results come? Income minus expense that now. Now, if there's some head office expense, we have to write it down at a corporate level, okay, at HO level, okay. Now, operating profit, if interest that we deduct profit before tax, then tax will deduct, the profit will come, final profit of the company. Assets, so segment, fixed asset, current asset, total asset. If there is a head office asset also, we have to add to make it a total asset. Liability, how much is segment liability, head office liability, how much is the total liability. We have to also disclose the revenue geographical area wise. It means from the domestic market to how much we have sales, export sales to how much sales we have from the export, how much we have, and the total here. Note, even if the head office income expense, internal expense are allocated segment, they are present in a total column only. They are saying that here now, interest here, okay, interest that here now, and the head office that they are talking that here, yeah, head office income and expenses will come that here. They say we have to show them a certain expense incurred at head office level, and the interest that we are going to show them at a here separately, will show them here. Okay, now what we'll do that here, now we'll come to super 100 questions. Okay, so come to question number 49. So the chief accountant of Sports Limited, okay, of Sports Limited gives the following data related to its 6 segments. So they have a 6 segment, M, N, O, P, Q, R. Okay, so they have given the segment asset 40, 80, 30, 20, 20, 10 total. This is segment result 50, then loss 190, then 10, 10, the loss 10, 30. Okay, total segment revenue 300, 620, 80, 60, 80, 40. So one by one, very simple. From the asset point of view, if I say that now, the total asset how much? 200. Take it to 10% of that. So 10% of 200 is coming how much here? 20. So it is more than 20. So I already highlighted them. More than 20, reportable segment. You can see that a 20 is coming 10% of total asset. Yes. More than 20, reportable. More than 20, report. 20 or more than 20. Okay. Yes, reportable. Reportable. It is not reportable. It is less than the 10% of the total asset. Okay. Now revenue. Let's take a revenue. I will come to result later on. 1200 multiplied by 10%, that is coming 120. So if it is 120 and more than that, that is a reportable side. 300 more than that, 620 more than that. So the AM and N are reportable. Now result, do the total of profit making. So 50 plus 10 plus 10. So 50 plus 10 plus 10 and this 30 also. Okay, how much is the profit? 100. Loss making segment total 190 and this 10. So 190 plus 10, 200. Whichever is higher, 100 or 200? 200. So 200 is higher. Take the 10% of 200, step number 3. That is coming how much here? Whichever is higher is step number 3. That is 200. Step number 4 is take the 10% of that. That is coming 20. So if any segment their profit or loss is 20 or more than that, that's a reportable. So 50 more than 20 reportable, 190 more than 20 reportable, less than 20, less than 20, less than 20, 30 more than 20 reportable. So whatever point I've highlighted, they are the reportable segment. Not necessarily all these three should be satisfied. Even if one is satisfied, we are going to call them a reportable segment. How simple it is. Okay. Now come to question number 50. That they say Nathan Limited has three segments, namely P, Q, and R. The asset of the company are 15 crore. The total asset they are saying the 15 crore. Okay. They say segment P has a 4 crore. Segment P has a 4 crore. Segment Q has 6 crore. Segment Q has 6 crore. And segment R has 5 crore. Segment R has what? 5 crore. The total is 15 crore. Then they say deferred tax asset including the asset of each segment R. P is how much deferred. Do you remember that I told you any income tax asset is not an asset for the purpose of segment reporting. So that you say what is income tax asset, what is deferred tax asset, we will cover in AS22. But it's an asset. Okay, deferred tax asset. So included in the each segment, P included 1, Q 0.9 and R 0.80. So this is we don't consider when you talk about the reportable segment. So I will deduct these from the each segment asset. 4 minus 1 3, 6 minus 0.9 5.1, 5 minus 0.8 4.2. These are total of the these are segment asset. Now take a 10% of 12.3. That is come 1.23. So if you can see that here, this is a 1.23. So these we have to consider, not these in income tax asset. So these three is more than 1.23. It's a reportable. 5.1 is more than 1.23. Reportable. 4.2 is more than 1.23. It's a reportable segment. Got the point? Now 51. XYZ Limited has 5 business segment profit or loss of each segment for the each year ended 31st March 22 have been provided below. You are required to identify from the following whether reportable segment are whether this reportable segment or not reportable segment on the basis of profitability test. So very simple. We have to do the total of profit making segment. So 225. 225 25. So 225 and 25, step number 1, a profitable segment. Step number 2, total of loss making segment. So loss making segment 175 20 and 105. So 175 20 and 105, these are total of loss making segment. Step number 2. Step number 3, greater of the above. So greater is 300. Step number 4, 10% of it. 10% of 300 is 30. Okay, so step number 1 2 3 4. 1 2 3 1 2 3 4. Okay, then here if see loss or profit is 30 or more than that, it's a reportable. 225 more than 30, reportable. Less than 30, not reportable. More than 30, reportable. Less than 30, not reportable. More than 30, report. How easy. If you see that here, how easy it is that here. Okay, it is so easy. Just you have to understand these that here threshold that. These rule is very important. Okay, just remember these three. How easy it is. Okay, now 51 done. Now come to 52. Same that they here they have say the profit or loss. You can do it now. Okay, is this profit making segment here is 780 1,500 and 6,000. So I will do the total 780 1,500 6,000 8280. Loss making segment then here is 2,300 and 4,500. So 2,300, 4,500, that is coming loss making segment. Greater of the two, 8280. 8280. Take 10% of that, 10% of that is coming 828 that year. 828. Okay. Now, when I say 820, it is the greater of the two. So we'll see if it is anything more than 828, so that is a reportable segment. So except first, all I have highlighted here are reportable segment as they are more than 828. Okay, done. Now 53, you can do it by yourself that here now. It's a segment report that we have to prepare. So we discuss the format of the segment reporting that here. Okay, format. This is the format of the segment, the reporting that here. Okay, so you can do by yourself that here. They have given you the information that here now. How much you have the sales for the each division that here. 3 division that they have, how much is sales that is the sales to different inter segment, domestic sale that how much export that you have. Okay, and that they have given the information how much interest, expense, income, asset. Okay, all things mentioned that is we have to prepare the report. This report in the same format that I've discussed with you here. Okay, so the most important but these questions that they ask you to give the answer on the basis of those 3 tests. Okay, so this is all about accounting standard 17 segment reporting. Next is we are going to do the revision of AS 18. Okay, don't worry, I will cover all the accounting standard. Okay, so just go through with the concept. The most important, as I told you, that here is the reportable segment. The question is going to come from these portion only. Okay, if you want to say anything, don't forget to comment. Okay, I will give you the reply there. That is for today. Take care, all of you. Bye bye.